What does a 102-year-old rental car company have to do with an 85-year-old nutritional supplement retailer? This is probably an odd way to start off a video about GNC, right? But don't worry, I will definitely explain the connection between those two companies before the end of this video. It's been about 30 days since the last GNC update video that I did. I'll pop up that one for you guys if you want to watch that. But since that last video in these last 30 days, there have been a few things that have been happening with GNC that I wanted to first just kind of update you guys on around the pending debt repayment and possible bankruptcy filing. The first one that I wanted to mention was kind of happened right after the last video. I kind of mentioned it in that last video that there was this kind of key date that GNC needed to figure out if they could renegotiate some of the trigger clauses, and GNC did, in fact, renegotiate those with their key lenders, and that was publicly announced on May 15th. And this just kind of extended the runway a little bit longer, gave them a little bit more of a breathing room for on those trigger clauses of their debt until June 15th. Like I said in that video, I was pretty much sure that they were going to figure out some way to extend it a little bit. And that was mostly because of all the COVID-19 stuff that was going on. That really kind of created a bunch of like hiccups in terms of bankruptcies and trying to figure out how do we move things forward. I assume that the lenders would give them a little bit more leeway. The second kind of bit of information was that information was leaked either on the GNC side, somebody inside there, or maybe somewhere on the lender side, that GNC was looking to acquire a bankruptcy loan, or what they kind of call a debtor in possession loan or DIP loan, from their senior lenders. So they were really like saying, hey, we might be at the end here. We need to secure financing to ensure that we can continue operating our business while we're going through Chapter 11 restructuring, bankruptcy. And for those that might not be too aware, DIP financing is unique in the sense that in terms of like other financing methods, it is usually put as the priority ahead of existing debt, equity holders, any other claims that they have that people owed money, be that partners, vendors, all those types of things, any other classes that GNC owes money to. The bank or the organization that originates the DIP financing would normally have priority over all other classes. Now, the third kind of bit of news was another kind of renegotiation of term loans from GNC, and this was announced on June 12th to again extend the runway on some of these trigger clauses, and it moved it forward another 2 weeks to June 30th. This was not as expected as the first one. I assumed that they would kind of get one extension and that was it, especially with the leaked information that they did start working on a debtor in possession financing to continue operations through the Chapter 11 restructuring. But I believe this kind of signals that maybe something's getting close on GNC side, or there's some other business environment trends that might prove interesting. And I'll kind of explain a little bit more about what that might be a little bit later in this video. I do want to add a little bit of an update around the delisting that I talked about in a previous video. The New York Stock Exchange did issue GNC a warning that said they were kind of out of compliance with being listed on the New York Stock Exchange. Those requirements are for the last like 30 days, an average trading stock value, a price of a stock needs to be over $1. And also the stock needs to be over a $50 million market capitalization. GNC, as I mentioned before, does have 6 months to kind of remedy this and kind of fix this. But at the time that I am filming this video on June 14th, they have not remedied that situation yet. I think there's only been maybe 1 or 2 times when GNC stock has closed above $1. So if you take the value of 30 days of trading and you average those out, they're definitely not close to that over $1 share price. I'm not exactly sure on the market capitalization side. I know last time I looked at it, it was somewhere around 80 or 90 million. So I think that one's a little bit easier for them to accomplish if they can keep the share price over $1. Now, that might not seem all that important, the delisting, but it will become extremely important with what I'm going to be talking about here next. And since we're talking about stock overall, I think it's time to kind of connect the two companies. The companies I was talking about is Hertz Rent-A-Car and then obviously GNC. And this is what kind of connects them, is what's going on with Hertz Rent-A-Car. To be completely honest, the world is downright silly right now. I mean, there's a ton of really kind of crazy things going on. So why shouldn't the stock market also be acting the same way? And there seems to be this kind of perfect storm that's happening in the stock market that is causing some short-term speculative stocks to be attractive, and even stocks that are kind of looking straight towards bankruptcy or already filed bankruptcy protection and restructuring. These stocks have, for whatever reason, become extremely attractive to a subsection of investors. So why is this happening? It's honestly truly unknown, but for me, I think there's a few things that I have just kind of noticed, and maybe some assumptions that maybe other people have noticed as well. I think the first one is that the $0 trades, so free trades on platforms like Robinhood, and a lot of other ones have kind of followed suit with Robinhood, but that allows you to buy small chunks of speculative stocks and actually make it profitable. Obviously, if it cost you $7 a trade, $8 a trade, or even years and years before it was $20 a trade, something like that, you wouldn't be able to kind of jump in and out of small amounts of shares of these kind of highly speculative stocks. But you could do that now. And I also think there's things just going on with like no sports betting. I know you can bet on a bunch of other things, but I'm talking about American sports at this point. And there's not even any sports to watch. There's no fresh TV programming, and there's a number of other things that keep people distracted, and they're not distracted. So instead, why not gamble on stocks? Learn the stock market. You saw a sharp decline heading into March, mid-March, and then you saw kind of a sharp increase. So you're seeing money signs, you're seeing the availability out there. But over some other things that people could be obviously indulging themselves in, highly speculative stocks could be just more towards betting and not actually learning. But I think if anybody's going to dive deep in and be interested in learning stocks, learning stock trading and learning capital markets and everything around that, that is a skill set that anybody should learn. So whatever gets them into it, great. Hopefully they're learning regardless if they're losing money or making money. This is a long-term skill that's going to be beneficial for the rest of your life. So I don't know if that's really a bad thing, but it's definitely something to take note of. And then also, if you just kind of type in the $ and the stock symbol in the search bar of Twitter, you will be filled with a bunch of day trading expert groups or mastermind types, or just people kind of retweeting certain things that they're doing in the stock market. So there's this big kind of community that is sharing a ton of stock tips freely. And because of that, that does create some effects, especially on some of these beaten small speculative names. If a large amount of people are buying things at once and that increases prices over time, these stocks can go up pretty significantly. I pulled a chart for you guys on a website called RobinTrack, which basically tracks a bunch of metrics for Robinhood users. And this first chart is with Hertz. And if you look at just January 1st, basically no one on the Robinhood platform owned the stock Hertz. And now you have over 160,000 users that are holding the Hertz stock. And if you look at Hertz and how they filed bankruptcy, I believe it was on May 22nd, about a week, you had the total users that were holding Hertz shoot up like a rocket. And so did the stock price. I think increased somewhere around 400 or 500% very quickly. And according to longtime trader and CNBC host Jim Cramer, he has been adamant that this is another form of a pump and dump scenario, or what he's calling now bag 'em, gun 'em, and liquidate, which is BGL. What his concern is that a lot of these new retail investors, say you just opened up a Robinhood account, or maybe you're just somebody that is a casual trader in stocks, you go on and you kind of look at the hottest trending stocks right now, or the biggest holding stocks right now, and you say, wow, this stock jumped 20, 50, 100% in one day. And without going and doing a bunch of research on that name and realizing, hey, this company is actually going into bankruptcy or is already in bankruptcy, you buy the stock not knowing any of that, and you end up being on the wrong end of that stock after all of the other people have gotten out of it. So you're stuck into a stock that now is probably diminished 50% or more, and you don't really know what's going on. It's one of those things where it creates a bad kind of scenario. So what does this have to do with GNC? Well, I pulled another Robinhood chart, this one on GNC, just so you can kind of see, and it's not as kind of popular on Robinhood as of yet, but around the time when GNC announced its 2019 quarter 4 earnings and did a bunch of things around the market issues around COVID-19 and really was giving some information to the market, the amount of Robinhood users holding GNC stock started to grow. That also created several price spikes, which included one day that it was actually over 100% growth. So people doubled up their money. But again, what does this all have to do with GNC? Like, how does this help GNC? Obviously, stock prices, that doesn't necessarily mean anything to GNC's issues, because stock prices, those are just people trading from one to another. GNC doesn't really make any more money if the stock increases from 50 cents to $1. That's not GNC that makes that 50 cents. That is the person that bought it and sold it at that point. It has nothing to do with GNC. At this point, these shares are traded on the market. And where this all kind of comes together and why this becomes beneficial to GNC is that a decision on Friday by the U.S. Bankruptcy Court for the District of Delaware gave Hertz permission to sell up to 246.8 million shares on the market. And this move to sell stock while in bankruptcy is essentially like unprecedented. This is not something that is a normal way of doing business. And because of Hertz stock price increasing so much, they're able to make upwards of about $500 million in cash by selling unissued shares on the open market. So now you're probably seeing the connection here with what it could be beneficial to GNC. Now, will GNC ultimately go down a similar path to utilize a similar strategy, issue some new shares into the market? At this point, with their extending and GNC kind of always figuring out a way to kind of make this happen, I don't know if this is something that would be attractive to GNC or not. What I will say is I want to warn anybody that is potentially looking to buy GNC stock if they do end up issuing new shares, because I think it's important for everybody to maybe take a look and do some more research around just how bankruptcy works, common shareholders, and where they are in terms of like the debt classes. You might be completely wiped out and not make any money on your shares if they don't have any money to pay some of the more senior debt holders within GNC. So unless you think that GNC has a significant and rapid, unanticipated improvement in their business conditions, and if you watch a lot of my videos, you know that's probably very, very unlikely that any of that's going to happen. And if you do know something about some event that is going to improve GNC's business, you probably have insider information. And that's a whole other kind of conversation, not for this video. But what I'll say is that this stock could be something that could go to zero. It's something that is highly speculative. And anybody that's looking at anything around GNC's stock for new offerings should at least be aware of that. I have no problem with stating that you should do your research. You should understand what you're getting yourself into anytime you buy any stock. Honestly, buy anything, buy products, whatever it is. If you're buying supplements at GNC or whatever, I mean, you have all the information at your fingertips to research a lot of these things. So I'm not going to tell you not to do something or do something. I'm not a financial advisor. I'm not a stock trader on any stretch of the imagination. This is just a connection that I saw in the market with Hertz that GNC could potentially deploy to recapitalize their business while they are potentially looking at a Chapter 11 bankruptcy. If you guys have any questions around GNC or anything that I talked about in this video, please leave a comment down below. Would love to hear you guys.
Thank you so much for watching this video. If you want to help support me, make sure you guys hit that thumbs up button on this video. If this is the first time you've been introduced to my videos, would love for you guys to be a part of my community by subscribing to my channel. I upload several videos just like this weekly. And if you guys want to connect further outside of this platform, I do include all of my social media links down below. I just want to thank you guys again for your time. Hopefully I gave you some value in return, and we'll see you guys on the next video.